Hello investors, welcome to Simply Stocks. The EV two-wheeler market is currently passing through a critical phase as the penetration of EVs among mainstream customers is increasing. Whenever a new product or technology arrives, it follows this path of adoption curve. In this, first comes the crowd of innovators and early adopters who are the first to buy any product. These are slightly different types of people who take risks and buy new products. But here the market is in very early stages and is small because population of innovators and early adopters or say early believers is low. Then comes a point when that technology moves past innovators and early adopters into the early majority and its mass adoption begins, meaning that technology becomes mainstream, people start buying it in heavy quantities and its sales increase rapidly. For example, you might remember when touchscreen phones arrived, first the adoption was slow, then sales increased rapidly. Similarly, the usage of Instagram, UPI apps and Paytm etc. boomed. Right now, the same thing is happening with EV two-wheelers. There was a wave of EV 12 to 18 months back. In between, there was also a period of some stress, but now this segment is booming again. That is why in today's video, we will do a side-by-side comparative analysis of Ola Electric and Ather Energy. Both of these are fully focused EV players and both businesses are trending a lot right now. We will find out, since Ola has corrected significantly, can there be an opportunity for a bounce back? Ather has consistently increased its market share and has grown significantly in the past year. Therefore, is that better? So without any delay, let's quickly start our analysis. India's EV two-wheeler market grew rapidly on a small base from 2022 to 2024-25. Then when subsidies on EVs were reduced, it remained tepid for 1 or 2 quarters. Consolidation happened and since then the sector has become stable and has now started to grow again. Although demand was good in the months from April to September, supply was affected due to a shortage of rare earth magnets. In H1, the segment saw a growth of 7 to 8%. Companies are dealing with rare earth magnets problem and are managing it in different ways for now. An even bigger risk than the magnet shortage came when GST was reduced on petrol and petrol vehicles. But despite that, the demand for EVs has remained good. Most EV players are doing backward integration and making parts themselves, due to which gross margins have improved and margins are reaching the level of ICE or petrol vehicles. Research and development has also contributed to improvement in margins. Now from here, as EV volumes increase further and scale comes, operating leverage will also be good. In such a case, electric two-wheeler sales will become profitable at EBITDA and then PAT level as well. So the sector is at an important inflection point right now, where sales can increase rapidly and simultaneously we will see good growth in profitability because sector's fundamentals have become better than before. And that is why we are studying this sector today. Now, a humble request, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simply Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Coming back to our discussion, now we will talk about the most important part of our analysis, which is comparison of Ola versus Ather. Ola has been a market maker in a way. Ola's marketing was always good, and by expanding rapidly, they spread awareness among people and created the market for EV two-wheelers in the country. But Ola has struggled a lot with product quality, after-sales service and customer support. Well, their customers have struggled more than the company. And the problem with high-ticket items, meaning expensive products, is that if you are selling an item for 1.5 lakh rupees, then customer trust is very, very important. And you know how much negative news has come into the market regarding Ola's products in the past 1 year. That is why you will see that even though sector has remained stable, Ola sales have halved compared to last year. Their delivery volumes and sales both have fallen quarter on quarter as well, Ola sales have fallen, and now in H2, their sales will fall even further compared to H1. Therefore, people who are currently buying the dip in Ola blindly don't understand the depth of the problem. And you can do this experiment yourself by asking people around you if they had 1.5 lakh rupees, or if someone is thinking of buying an EV two-wheeler, which company's product would they want to buy? By now, many good options have also arrived in the market, from River to Bajaj Chetak EV, etc. And no matter how bullish someone is on Ola, it is going to take time for them to rebuild their brand image. And even the sales that Ola is getting right now have a major contribution from deep discounting, meaning the company is selling its products at lower prices to bring in sales. Besides, they are moving out of metros into smaller cities for sales, because on one hand, competition has increased in the metros from TVS, Bajaj and Ather. Secondly, it is easier for them to enter new markets and show sales rather than improving their brand image in metro cities. On the other hand, you will see that in 6 months, from April to September, Ather sales have increased by 64% compared to the last year. And if we look in terms of volumes, there has been a great growth of 78% in the business. Ather's product quality was always good, always top class. And moreover, the company has been working quite a bit on its marketing and branding for the past 1 year. Ather has now almost come equal to Ola in sales and volumes, and at the rate Ola sales are falling and Ather's are increasing, Ather will move past of Ola by March. Another interesting thing here is that you will see Ather's store network is quite small compared to Ola. Ola has a network of nearly 4,000 stores, and Ather currently has some 524 experience centers, which they will increase to 700 by March. But despite such a huge difference in store network, Ather sales have been equal to Ola. This table contains data from April to September. Now, if we look at the performance of October to December months, meaning Q3, then Ather has moved quite far ahead of Ola. You will see that Ather has sold double the vehicles of Ola in these months. Although Ather itself has seen good competition from TVS and Bajaj, you should not worry too much about that, because see, two-wheelers in India is a very big market with many different segments based on pricing and purpose. So many companies can coexist here together. Now, talking only about Ather, they have more than doubled their market share in the last 15 months. On another hand, Ola has been losing market share. Also, Ather has rapidly expanded its store network. Experience centers have gone from 218 to 524, and I was telling you they have a target of 700 stores by March this year. Ather has a good presence in the south, and now they are expanding into central and north India. In the south, Ather's market share has reached 25%. Similarly, in Gujarat, their market share is around 23%. Therefore, this is also a strong case that as Ather expands and moves upwards, they will get the benefit of market share gain there as well. Ather is quite far ahead in its technology integration, features, reliability, battery performance, charging speed, etc. We will not go into much detail, but overall, if you compare with other players in the market, they have a moat of product quality and charging infrastructure, which will be seen playing out over time, if not immediately. Let us look at this last screenshot, then we will talk about Ola as well. Here you will see that margin expansion is also happening rapidly. In the last 1 year, the company has come from a negative EBITDA margin of 23% to a negative EBITDA margin of 12%. Basically, we can say that losses have reduced. We already know the sales numbers. Now, when these October to December results will come, this margin improvement will be a big trigger that we need to track. Now, coming to Ola, honestly, there is not much to say about it. We are seeing in front of us that Ola sales are falling. Ola's management gave guidance in Q1. Then in Q2, they said that company won't be able to do that much. They reduced their target and said that in H2, they will try to sell 1 lakh units. Currently in Q3, they have only been able to sell approx 32,700 units, and Q3 is the biggest quarter because of the festive season. So they will be missing on their revised target as well. When a company is unable to meet its given targets or guidance, the market loses trust in that business. Institutional investors and big investors stop tracking it, and you must have seen that then such a stock also stops performing. In Ola's case, this has happened who knows how many times. Besides, if you listen to their con call, you will feel this thing there as well. While the sector is growing and companies are talking about increasing market share, Ola's management is diverting the talk to emphasize on profitability, unit economics, and all these things. Other companies are improving their margins and unit economics along with the growth. Apart from this, the company had entered into electric bikes as well, but there too, there have been product quality issues. The EV scooter market itself is still developing right now. EV scooters are currently being bought mainly for intercity commute only. Contrary to this, motorcycles or bikes have many use cases. People go on long distance rides and so on. The electric bike market in India is at least 2 years away. You have to understand the usability and scope of the product beyond marketing and PR, whatever the company is doing, which is not there yet. I mean, usability and scope is not there yet. Moreover, there is hype in the market regarding Ola's battery cells, but that business will take time to grow. Sales of 7 CR approx have come from cell business in H1. We will have to see how quickly the company can increase production there and is able to bring customers for BESS. In that too, if their two-wheeler volumes keep falling like this, then difficulties will increase for them. You still have to look at Ola as an automobile company, and they are currently struggling a lot there. Basically, we can say that while Ather is gaining market share and growing, on the other hand, Ola sales are falling, market share is declining. Ola certainly has worked well on battery cells, but from an investor's perspective, their main business is still EV business, where volumes are falling. Until Ola's volumes and sales grow again, this is a very risky business, and you cannot take risk lightly because competition in the sector has now increased compared to before. Now, if you like this video, then do give me a thumbs up. Along with that, you can also subscribe to our channel, Simply Stocks. If you support us with your likes and subscribes, we will be able to bring more such videos for you every week. So definitely like this video, and yes, also subscribe to our channel. I will see you in the next video. Happy investing.